Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's get to some of the stories we're following in the BNN Bloomberg newsroom. Prime Minister Mark Carney will visit China next week as his government tries to rebuild a relationship and reduce Canada's economic reliance on the U.S. Carney is set to meet with Chinese President Xi Jinping with discussions focusing on trade, energy, agriculture, and international security. The trip marks the first one by a Canadian Prime Minister in more than 8 years. Meanwhile, U.S. President Donald Trump says Venezuela will send up to 50 million barrels of oil to the United States at the current market price. The cost would be about $2.8 billion U.S. Trump says the move will benefit both countries. All this comes as a blow to China, which was previously a top buyer of Venezuelan oil. Venezuela has a backlog of unshipped crude since the U.S. blockade of sanctioned oil tankers was announced last month. Home sales across Toronto saw a decline in December, along with the average selling price. Data from the Toronto Real Estate Board shows sales fell 0.4% versus the month before, while the price of a home dropped 5% annually, and sales were off by more than 11% as buyers failed to return to the market despite lower interest rates and more listings. The board says economic uncertainty weighed on the housing market throughout the year. Looking at the markets, well, TSX looks like the 2026 rally is coming to an end. It's off by about 0.9%, being dragged down by materials. Silver stock taking the biggest hit. South of the border, mixed bag down there when you look at it. A little bit up, a little bit down. The S&P 500 up by 0.15%. The Dow, after starting to push toward 50,000, off by about 0.4%. And you can see the Nasdaq is up 0.64. Well, Prime Minister Carney promises that Canadian oil will remain competitive even as oil prices continue to slip following Venezuela's recent exchange of power. For more on how this is impacting broader markets, we're joined by Steve Rolls, Senior Portfolio Manager at Trivest Wealth Counsel with Wellington Altus Private Counsel. Steve, thanks very much for joining us.
Hey, Roger. Great to be here.
It looks like the markets kind of had their reaction. Things seem to be calming down as everybody's trying to sort out what's unfolding.
Yeah, it does indeed. I think Trump's comments today about, up to 50 million barrels coming online. Well, that's going to put more supply in the market, and that's put pressure on the price of oil. So that's why we're seeing the markets react the way that they are. But it's a very interesting time indeed, looking at the oil markets overall.
And have we seen any details on when that's coming on? Because they're already running at about a million a day overproduction?
Yeah, right now they're about 800,000, which is equivalent to the production of Suncor. So it's really, it's so early to tell what's happening right now. There are more questions than answers right now. And when you have this type of environment, it's more of a speculative type of market than an investment type of market. So it's very difficult to know exactly what's going to happen. There's so many questions about the government's coming in place, the property rights, constitutional rights, and how long this is going to take and what the overall plan is. A lot of rhetoric, but we need to know more about what's actually going to happen with the governance. So right now it's more of a speculative market.
And what are you doing with all that? Are you just kind of sitting on the sideline going, let's just sit here for a second?
Yeah, I think it's best. I think on the Canadian side, I'm holding on to all my positions, primarily Suncor and C&Q. But on the U.S. side, there is some optimism, and specifically with Chevron, which is an existing holding of mine. So that's, I think, the most attractive play. So the winners are really the U.S. Oil producers long term, should benefit from this, obviously. But the number one winner is actually the country of Guyana, right next door to Venezuela. And they've been under some pressure over the past couple months and years with territorial claims by Venezuela as recently as March, claiming over 2/3 of the region of their entire country. Now, more specifically, there's been some great offshore developments on the oil markets in Guyana. and specifically with a consortium of Exxon holds 45% and of a consortium, including Chevron with 30%, which they acquired from Hess last year, which was approved in July this year. And then the third member of that consortium is CNOOC, CNOOC from China. So with having the territorial claims put to the sidelines now, that opens up that 11 billion barrels of reserves that are offshore. So that really opens up a great market for Chevron, Exxon, and China as well.
Yeah, Guyana's kind of the quiet little sibling sitting over there. It's going to sound funny, but I was playing one of those geography games, and Guyana was one of the things on it. Their GDP is, I think, 40,000 per person, I think, per capita. It's a little quiet powerhouse down there, isn't it?
It's a powerhouse indeed, and they need the infrastructure, and it's coming in waves, and they have the biggest market there. So I think that this is a story that's not really being talked about, but having that territorial claim now gone, it's a free market there. So they're producing about 1 million barrels a day, and that is expected to increase substantially till 2030, up to 2 million by then. So more supply, more money for those three companies.
And any other opportunities do you see for Guyana or in that area? You've got Suriname there. Are they similar situations, or is it more just Guyana with the oil?
Right now it's Guyana, and right now I think it's best to focus on the short term till we know what the long-term plans are. But the entire region, Trinidad and Tobago, there's some opportunities there for more offshore discoveries. So it's the entire region is quite buzzing right now.
And then moving back up to Canada, you mentioned some of the companies. But for now, it looks like Canada's fine, but we really do need to get our ducks in a row, though, don't we?
Yes, indeed. It's a question of, okay, we need a pipeline. We all know that. We had an MOU announced on November 27th, standing ovation, elbows up, let's go. But the question remains is who's going to pay for the pipeline? If there's other areas of the world which have are open for the oil markets, who's going to be funding that $40 billion pipeline to be built? It's a question that remains. Premier Eby in BC is talking about refineries. Well, who's going to build the refineries? Where's that investment going to come from? And more importantly, if you build a refinery, well, those require more pipelines. So I don't quite understand what the philosophy is there, that there's an immediate need for a pipeline. Hopefully it hasn't passed yet, but we need to know where that money is going to come from. We need to be an investable country again. So it's deregulation is key right now.
Okay, we're going to have to leave it there, but Steve, thanks as always for joining us.
Great. Thank you, Roger. Take care.
Cheers. You too. Steve Rolls, Senior Portfolio Manager at Trivest Wealth Counsel with Wellington Altus Private Counsel. Coming up, hot picks in pharma, including one company which is in advanced talks to acquire a company for $1 billion US. That's when we come back. Time now for hot picks in pharma. We were joined earlier by Evan Sigerman, Managing Director at BMO Capital Markets. We kick things off with the likes of Gilead Sciences.
Gilead is the leader in HIV treatment and prevention. We are very bullish on their long-acting prevention asset called Yeztugo. We also like that they are making really good headway in the cell therapy space. So these are cell treatments to treat blood cancers. We think they're going to be very competitive in the multiple myeloma area, kind of competing against J&J and Legend's Carvykti, potential approval later this year. So beyond kind of the fundamentals of the company, and they also inked a deal with the Trump administration late last year, kind of taking some of investors' fears off the table regarding MFN pricing or most favored nation pricings for their HIV business. They have a lot of capacity to do transactions. I think that they've really done a good job of cleaning up house, tightening up their P&L, looking at their expense base. And I think that they are in this growth mode and can execute very well into the end of the decade, driving superior returns.
And HIV is still a big enough problem for a company to make money from medications in this area?
Great question. Yes, it is. There are, millions of people living with HIV globally. And beyond that, they are working to prevent new HIV cases. So that's really what's key. They have a long-acting product called Yeztugo I had mentioned, and we believe that's going to be the market leader. So we see strength in that franchise into the 2030s.
Your next idea is a company called Disc Medicine. Its symbol is iron, I-R-O-N. Tell us what's their main focus?
Great question. So this is one of our biotech picks. The reason why their ticker's iron is because they deal with the blood, hemoglobin, and iron, kind of a little play there. But why we like Disc Medicine. So they were a recipient of the Commissioner's National Priority Review Voucher. So one of the special priority review vouchers given to kind of assets of high unmet need for a drug called bitopertin. Could be approved this month. They had some really good phase 2 data. And for a small biotech company to have an approved asset, 3 or 4 years after they kind of did the reverse merger is really impressive. Beyond that, they have a drug looking at anemia associated with a blood disorder called myelofibrosis. Competitive space, but we really like what they see. So the key here is small biotech company with multiple shots on goal, and that's a unique feature among kind of the universe.
Let's get to Eli Lilly, and maybe can you talk to at all about this news from the Wall Street Journal that they're in talks to buy an outfit called Ventyx?
Most definitely. So we put out a note yesterday, so I'm happy to talk about it. Ventyx Bio is a smaller biotech company. I think the deal kind of in the journal had suggested about $1 billion. So not a huge number for Lilly, right? They have almost unlimited capacity to transact. But what this would get Lilly is a host of small molecule drugs for various inflammatory diseases like ulcerative colitis, Crohn's, other diseases kind of in the cardiovascular system. They also have a drug that allows for inflammatory control in the brain, potentially for Parkinson's disease. So higher risk, high reward. It seems like they're buying a platform and assets that they think they can take potentially forward. May not all work, but really highlights Lilly's focus beyond obesity into the inflammatory space.
Lilly generally is a stock you like, is a big driver of that, the GLP-1 drugs?
Most definitely. I mean, we still believe they are the leader in the GLP-1 drugs. Their lead asset, Zepbound, is the best in our view. We also highlight that their small molecule oral orforglipron likely approved at some point in the first half of this year. Going to go toe-to-toe with Novo's oral Wegovy. A lot of focus on that. But what's key here is we see Lilly continues to execute and provide, create products for all patients kind of on the obesity spectrum, the lower efficacy, think with orforglipron, all the way up to a drug called retatrutide for patients who really need, rapid and sustained kind of deep weight loss. We also like that they have assets outside of obesity, kind of unlike Novo Nordisk, or really where they're focused. Novo is really just focused on obesity and diabetes. They have other assets. But with Lilly, they have, oncology, neuroscience, inflammation, and that diversity gives us comfort in their broad business.
And can you just update us, have these GLP-1 drugs that you just take a pill for, are they actually on the market now? Because I know the industry's been desperate to get them out there.
Great question. So in late December, right ahead of Christmas, FDA approved the Wegovy pill, so the semaglutide Wegovy tablet. And Novo earlier this week announced availability. They are starting via the cash pay channel. I think in the United States, the low dose is $149 a month. Not available kind of outside of the United States, but a lot of focus there. One other thing I want to highlight, I get a lot of questions on the potential for a generic semaglutide in Canada. We got some reports that there are delays for potential approval because of some manufacturing issues. So we're closely watching that. Could come later this year, but could even be delayed beyond that.
So it's semaglutide. It's not semaglutide. Yeah, I thank you.
Tomato.
I know, I'm going to go with what you say, Evan. Why not? Thanks very much. Just before we let you go, because we love hearing your insights on drugs, what else should we look out for in 2026? Is there a big event coming for investors, do you think?
Great question. I think there's going to be a lot more M&A. Obviously, we had the news of the potential news of Ventyx and Lilly, but a lot of the companies that I follow, the big biopharmas need to buy. So Merck, Bristol, Lilly could buy the European pharma companies. We know Novo is going to buy. all these companies need to add to their portfolios, which is great for the small biotech kind of ecosystem, which is why I highlighted Disc Medicine. And I think that that is going to be a key driver of this space going forward.
And Andy was speaking with Evan Seigerman, Managing Director at BMO Capital Markets. Next up, we'll take a deep dive into the world of Canadian startups and what they could expect in the year ahead. That's up with Abdullah Snowbar, Executive Director and CEO of DMZ Ventures. Startups, small businesses, small startups faced a lot of uncertainty in 2025, all because of what was going on with the trade war, tariffs, economic uncertainty. So what can we expect for 2025? We're joined now by Abdullah Snowbar, Executive Director of the DMZ and CEO of DMZ Ventures. Abdullah, thank you very much for joining us today.
Thanks for having me, Roger.
I mean, I think a lot of that uncertainty is kind of carrying through. Of course, we've got CUSMA coming up and the economy is which way are we going to go with it? But I think there's also some reason for optimism.
There absolutely is. Look, I think for once, Canada and finally is thinking like a country again, and we're seeing massive opportunity for entrepreneurs and small businesses alike. With all the geopolitical tensions, the trade wars that are causing a lot of this uncertainty, I think Canada can actually now continue to look at how do we buy Canadian, how do we support Canadian, everything from groceries to software. You know, how do we think about choosing homegrown Canadian businesses to support, to really ultimately help build great Canadian jobs that are the backbone of this economy? So it is certainly looking up and up, and I think hopefully it's going to be a new phase for us to kind of see ourselves through the next year.
And to get ready for that, I mean, 2025 was challenging to say the least for many of these small companies and startups. Does it feel like they've retooled and now they're ready for what lay ahead?
Yeah, look, I think the mindset needs to change a little bit, to be quite frank with you. You know, uncertainty isn't a phase anymore. It's actually the operating environment. So, you know, the state of the markets, the government, global economy, it's all unpredictable. So the mindset really needs to change. And we coined the term here at DMZ called the camel mindset, where, you know, 2026 needs to be the year where we actually reward business owners that can survive these downturns and these challenges that are going to exist and continue to exist in the economy, obviously, as we continue to look at the world and how it's evolving. So companies and startups need to figure out how to find a strategic balance of growth and profitability, sustain growth, which hopefully continues to be overnight success, and the mindset of, you know, growth by any means possible. It's about sustainable growth now and being more thoughtful in the approach, and then quality over quantity, and having a deeper focus over just flashy business ideas. So market leadership in 2026, I believe, means that proving you can last, not just launch a business, right? So it will be one to watch for sure.
Okay, and so what are some of the tools that they need heading into 2026, or what are some of the tools that you see coming in to make their life, make their chances of success better?
Look, I don't want to be sound like I'm super repetitive, but we've talked about this on the show before as well. AI is the ultimate tool that needs to be leveraged by every business that exists. I know that a lot of folks are looking at AI as a tool that will likely, you know, that's going to kill businesses or replace small businesses. But small business owners who use AI will actually replace the ones that don't, quite frankly. And I think that's going to be a game changer for many in the space right now that are trying to understand, how do we become better at what we're doing? How do we respond faster to customer needs? How do we have smarter, more dynamic pricing? How do we forecast demand? How do we reduce manual work? And all that is leveraged by artificial intelligence and should be a part of the business as opposed to an afterthought. So, you know, letting business owners focus on customer needs and the product, and making sure that they're actually removing any administrative work and operational drag that is unnecessary and more of a cost. So that's probably one of the biggest tools that should be looked at in terms of considering how to run a business today relative to maybe where we were a couple of years ago.
And Shop Canadian is if you want to talk about Shop Canadian, there are so many incredible opportunities here when it comes to AI. We're still a hub. We're still a hotbed for it, aren't we?
We are, absolutely. And this is that's the best thing about Canada, that we are, we have the godfather of AI. We are a hotbed for it. We've been able to do so much. There's a collective mindset around, helping Canadians get ahead and be better. We're in a moment where I'd say it's the opportunity, and all these things that are happening around us should be the wake up sign and the signal to say, let's do everything we can to support small business and startups to get ahead and be the best version of themselves, not just at home here, but also globally. So pushing the boundaries a bit more, being able to double down on certain areas. And we've talked about this before as well, but looking at new verticals that are going to be strategic for Canada, including defense, which we're hearing all levels of government talk about quite intensely. Defense is going to be an emerging and a huge growth vertical for small business owners to think about. Billions of dollars are set to flow into this space. And when we consider what this means for any business, it's not just cybersecurity. It's also looking at it from a manufacturing lens, from apparel and textiles, from logistics, transportation, last mile delivery, warehousing, the whole gamut. So there's so many things and considerations to have in this space, and it opens up new opportunities and new pathways for small businesses to consider as they take this year ahead.
Okay, and I think we're going to have to wrap it up there, but Abdullah, thank you as always for joining us. Love to extend this conversation, but we're out of time.
My pleasure. Thank you very much, Roger.
Abdullah Snowbar, Executive Director of DMZ and CEO of DMZ Ventures. Coming up, a new report from Deloitte says 2026 is likely to mark an inflection point for the Canadian economy. We'll get more from their chief economist after the break. Shares of Blackstone are falling after housing comments from U.S. President Donald Trump. They're up about 4.5%, but at one point they were down 8 or 9% even. Trump plans to ban institutional investors from buying single-family homes as a part of a push to address housing affordability. In a post on social media, Trump said people live in homes, not corporations, adding that he would ask Congress to codify the action. Last month, Trump warned he would unveil aggressive housing reform plans in the coming year. British Columbia Premier David Eby says Canada should prioritize building more oil refineries over new pipelines. The response comes after Alberta Premier Danielle Smith called on the government to expedite new pipeline infrastructure to the BC coast. Eby says the existing Trans Mountain pipeline is not at full capacity and could be expanded further. The remarks come amid the threat that Venezuelan oil could begin to displace Canadian crude in U.S. refineries. Shares of Ventyx Biosciences and Eli Lilly are higher today, with Ventyx seeing a surge. The Wall Street Journal is looking at 37.3%. I just glanced down there. Holy cow. Wall Street Journal is reporting that Eli Lilly is in advanced talks to acquire the biotech company for $1 billion US. Ventyx specializes in drugs for inflammatory diseases. According to the report, the deal is aimed at Eli Lilly expanding its work in immunology as it looks to build beyond its super successful diabetes and obesity treatments. And looking at the markets, the rally that started the year looks like it might be ending for the TSX. Materials dragging it down, silver specifically. It's off by 0.89%. South of the border, it's a mixed bag there. You can see the S&P 500 just about a wash. The Dow Jones off by about 0.53. The NASDAQ, though, is up 0.6. After a year of extreme uncertainty for Canadian trade, the country may be starting to turn the corner as the government enacts policies that aim to make Canada a more attractive environment for investment. For more on this, we were joined earlier by Don Desjardins, Chief Economist at Deloitte Canada.
Growth at about 1.5%, so a shade slower than in 2025 when it was 1.7. That's our estimate as well. I think what I'd say is that we think the first half will be slow. We're going to continue to operate under these extraordinarily uncertain conditions, but we do see reasons that we will see a strengthening in economic activity as we exit 2026 and head into 2027.
What are the brighter signs here?
Well, I think there's a few things. One is that although we're heading into the throes of it, we will have our review of the Canada-US-Mexico trade agreement. Now, our baseline assumption is that we maintain our carve-outs for our exports to go relatively tariff-free south of the border. We still maintain in the forecast some of these heavy tariffs we're seeing on those industries you mentioned earlier. So that takes a little bit of shine off that. But we think that as we go through the review, while the deal might not look exactly as it does today, it will in large part allow us access to our largest trading partner. Additionally, we do think that interest rates will remain relatively low. We have the policy rate holding at 2.25% throughout the course of this year. And I guess when we think about all of the policies that governments across this country are trying to put into place, we think by and large we will see enough on that side of the equation that it will restore business confidence and that businesses will start to put some money to work.
Politicians love cutting ribbons and talking about infrastructure spending, and that's the real core of the government's economic policy right now. They haven't gone for big tax cuts, as you know. Do you think they're on the right track?
Well, certainly when we think about what will instigate some investment by Canadian businesses. Sure, taxes, a big issue. But when we look at other things that are impeding their investment activity, we're seeing lots of red tape, as you say. So the elimination, or at least a significant reduction in some of those measures, I think will go some distance to helping businesses say, okay, we can get a return on our investment on a relatively good time. The other thing, as we know, is infrastructure. We need it. We need it to be improved so that our companies can get their goods to other markets outside of the U.S. timely and less costly.
Do you think there's a problem, though, that international business is going to be wary of Canada because of the trade threat? And also, I don't know if it's at the back of people's minds, President Trump's insulting remarks about Canadian sovereignty.
Well, I think if we're setting the stage to see investment and we start to see Canadian companies invest, that is going to show the world that, we are ready to build, we're ready to improve our productivity because we're willing to put our own money into our economy. And I think over time, and remember, none of this is going to happen quickly. We know that for sure. But if we start to see those pieces moving towards investment coming from Canadian companies, I do think that those opportunities will be seen by international investors as well. Again, we're not anticipating any huge very rapid increase in investment. We do think it's going to take time. So as we exit this year and look to 2027, if we see some concrete improvement in some of these measures, that should, we think, be a catalyst for investment activity.
What about the labour market? Do you see much prospect, well, particularly for younger people who've had such trouble finding work?
Yeah, I mean, certainly when we're looking at the labor market right now, it is pretty soft. Companies are saying, sure, I may not be looking to reduce my workforce because we know population growth is slowing. We know that immigration is coming down significantly. But by the same token, not necessarily looking to add. So what's going to take to get them to really look at adding to the workforce? It will, in fact, I think, be this improvement in confidence, this sense that yes, we're going to have access to the U.S. market. It's not going to be tariffed, and we will see demand for our goods continuing. So again, it's sort of a longer game. We're looking at the economy sort of in two halves, if you will. The first half is probably going to feel not that wonderful, but as we get through the review of the agreement, as we get to see some concrete results from government initiatives, we think these are the things that are going to turn sentiment, and we should start to see an improvement in the labor market conditions. But again, it's a bit of a time factor here.
And he was speaking with Don Desjardins, chief economist at Deloitte Canada. Coming up, Prime Minister Mark Carney is going to China. We'll discuss what it's all about after the break. The Prime Minister's office has confirmed Prime Minister Mark Carney will make his first official visit to China next week. For more on this, we're joined by BNN Bloomberg's Lindsay Biscaya. And Lindsay, what details do we have about this meeting? First one in a while, isn't it?
It's the first one in almost a decade. Prime Minister Justin Trudeau, he was Prime Minister at the time, was last there in 2017. So this is a big development. This is kind of the process that Mark Carney has started in terms of warming these very frosty relationships we've seen with China over the last couple of years for many different reasons. But this was part of what Mark Carney talked about when he talked about diversifying trade away from the U.S. So we're going to see this meeting next week from Tuesday to Saturday. The Prime Minister will be in China. He will be meeting with Xi Jinping, the president of China, and will apparently be discussing a couple of different things: trade, agriculture, international security. Right now, of course, as I mentioned, relations are a little frosty. We've also got tariffs in place. So Canada has 100% tariffs on EVs, and China has tariffs still on canola seed and canola oil. So a little bit of warming up to do when you talk about these relations.
And do we expect any of those to be anything in the rumor mill or coming out of Ottawa
A lot of economists are saying don't really expect anything. Don't get too excited about this meeting. What's going to be interesting is how this affects Canada's relationship with the U.S. I was speaking today with Drew Fagan, Monk School professor at U of T, and he was talking about what this might do to the relationships with U.S. He says when CUSMA was renegotiated, there was a section that said if any of the three parties sign a free trade agreement with a non-market economy, they will provide notice well in advance of the negotiations to the other parties. So that non-market economy is basically China. That's what Professor Fagan was saying today. You just didn't actually have that in writing. And a free trade agreement with China, that's very, very, very unlikely, obviously, coming out of this meeting. But really, his point that he was getting across was just how important it was for the U.S. to know whether Canada or Mexico are having any kind of negotiations with China. And there's been so many examples of this, particularly when it comes to Chinese EVs, right? The U.S., put tariffs, more than 100% tariffs on electric vehicles coming out of China, and then really pressured Canada and Mexico to do the same. And of course, Canada didn't at first and then caved to the pressure. And now we have 100% tariffs on electric vehicles from China, and then Mexico followed suit as well. So it just goes to show just how important it is to the U.S. whether we, Canada, are talking to China and making any kind of trade negotiations. So that will be interesting to see, particularly when we have that renegotiation of CUSMA coming up later this year. But in terms of this meeting between China and Canada, a lot of people are saying don't get too excited. This might just be like the first step of many when it comes to warming these relations, and then perhaps we can talk about easing some of those tariffs later, because those tariffs that China has on the canola industry here in Canada, that's huge to our agricultural sector. That's hurting a lot of people. So I'm sure, a lot of people in Canada would like to see that lifted.
Okay, well, we'll see what happens. Lindsay, thanks as always. BNN Bloomberg's Lindsay Biscaya. Well, for more on this developing story and Canada's evolving geopolitical position, we're joined now by Jacques Shore, Government Affairs and Trade Partner at Gowling WLG. Jacques, thanks as always for joining us.
Great to be with you, Roger, and Happy New Year to you.
And Happy New Year to you as well. It's been an interesting New Year so far all around. Let's talk about this journey to China for Carney. Where do you think this is going? What do you think will come out of it?
Well, I think that he's going to China certainly at a very interesting time. Put the context and the quotations on interesting. Look, there's a lot that's happening in the world, and no doubt he is preparing himself for some interesting conversations as well. It has not been easy for us to really determine where we go and what we ought to do with regard to China. I've used the expression in the past, every 5 years we have to figure out how we figure in when we deal with China. But when you look at that against the juxtaposition of what's happening, we just saw Maduro basically captured out of Venezuela. We look at the conversations that have been taking place recently out of the White House, and maybe some of the strong wording coming out with respect to Greenland. It puts Canada in a position where it has to think of these things very strategically. We have to be very careful. I think, first of all,
Absolutely.
I'm always reminded by the fact that Americans are our best friends. They are great friends of us. As difficult as it is to deal, perhaps at the moment, with the current administration, bottom line is our relationships are strong. We're allied to the United States. We have many significant arrangements in place, aside from CUSMA, aside from decades of working together, but also NORAD. And how that sort of plays out in the context of how we then address issues with China is important. We obviously want to diversify our trade activity. We also have to make sure that we are careful in terms of what arrangements we pursue with China, but at the same time, no, there's no question we're not going to have a trade agreement with them. But I think the idea to perhaps strengthen the relationship from a diplomatic perspective, cultural perspective, otherwise, that could also be helpful to our American friends. That could be helpful because in the past they played that role of being able to be a mediator, intermediary, and work certain things out together. So I think at the moment what we have to do is focus, as the Prime Minister is, diversifying our trade activity, recognizing our strengths. I think that the last few days have demonstrated we need to sit down with the Americans very specifically in dealing with what is going on in the context of the conversations on Greenland. We are neighboring to Greenland. We have a tremendous affinity in working together on the circumpolar group with special relationships there where Canada, I think, can play an important role in maybe minimizing some of the tough talk or things that are going on. When we're looking at something like Greenland, which is, one can call it an unsinkable aircraft carrier, we have the ability in the North of being able to address the issues of sovereignty in the North and also defense issues, which is obviously so important to the Americans. And obviously, it's important to the Americans because they look at the Northwest Passage. They look at the way climate has obviously affected our North. And what does that mean then for Russia? What does that mean for China, who are on the other end of the spectrum in terms of how our thinking is on a number of issues?
Well,
our values,
the Northwest Passage for us is a bit of a wild card with this because a lot of people look at it as an international waterway. Canada says, no, it's ours. And America, if they're serious about Greenland, then why wouldn't they be serious about looking at some of our islands up there, Baffin and other ones that are virtually uninhabited? And they would maybe say the same to us and want to say, we want to buy that.
Excellent point. And that's why I basically look at the nature of our relationship, working with our American, I think really congressional leadership in the United States, for them to absolutely understand, appreciate that we are that much better working together. Why would they have to make that kind of investment when we are already in the North willing to address these issues in a very meaningful way, in a strategic way? And let's face it, we are aligned in terms of how we address those issues in the North in ways that I think are extremely important. And, I look at critical minerals. I look at the ability of being able to grow opportunities together with Americans without having to intercede and take over anything. It's how we can actually manage those relationships together. Mark Wiseman, our new ambassador, has his work cut out for him. And I'm absolutely confident that in the way in which the Prime Minister and the new ambassador are addressing these issues with others, we will succeed. But again, comes down to how do we deal with China in a way that's beneficial, extremely beneficial to Canada, but at the same time not going to in any way affect our relationship with the United States, which I think has to be for us at the moment a key priority, along with Europe and along with the other like-minded countries that are our allies.
And just quickly before we go, if you can, how much of a factor will Venezuela be with CUSMA with the negotiations, do you think?
I think that's an excellent point. I don't think it'll have an effect on that. I think that I think obviously, there are issues that will come into the context of energy, but the fact of the matter is the output of oil from Venezuela currently is at 1%. 10 years ago was 2%. So it's not like that's going to make any significant difference. Our oil is a far, I would say, a far better one to basically refine and to deal with. And I think at the end of the day, our markets, I think what I see is opportunities for us to look for new markets, as Danielle Smith has said, but at the same time, focus on what we do best in being able to get that oil to markets. And I don't think I'd be that concerned about, at this moment, I don't see the competition coming from Venezuela.
All right, we'll have to wrap it up there. But Jacques, always a pleasure to talk to you. Thank you, sir, for joining us.
Great being with you. Thanks so much, Roger.
Jacques Shore is Government Affairs and Trade Partner at Gowling WLG. Still ahead, Discord is joining the list of rapidly growing pipelines of venture capital-backed tech listings. Carolyn Hyde will be here to tell you what we know about the IPO filing or possible IPO filing. Stay with us. Discord, an online chat platform, filed confidentially for an initial public offering, according to people familiar with the matter, adding to a rapidly growing pipeline of venture capital-backed tech listings. For more on this now, we're joined by Bloomberg's Carolyn Hyde in Las Vegas at CES. Carolyn, thanks very much for joining us. A lot of hush-hush surrounding this, and it may not even happen at all.
Of course, this is a confidential initial assessment of putting their documents towards the SEC, the Securities and Exchange Commission. So they confidentially file the documents before they then go on a roadshow with investors. So yes, this is hush-hush, but according to some of my sources and those of my colleague Bailey Lipschultz, this has formally gone to the SEC now. And we're even looking as close as a March listing. This is what some of the advisors are currently pushing for, we understand. Look, their advisors thus far, we understand, like JP Morgan, Goldman Sachs, were hired all the way back in March of last year. And we're seeing that finally maybe Discord has set itself up for the moment to list to the public. Now, this is a company that was valued at about $15 billion back in 2021 when valuations were pretty high. We understand, according to secondary market information, where the trades currently happen in private markets, we're looking more at about a $7 billion valuation for the company. Remember, this is decade-old chat company, origins in gaming. And they very recently had a change at the top. The executives changed. So Ed Citron moved from being CEO and co-founder to being on the board. And they've actually brought in an Activision Blizzard alumni to be the CEO who's going to be able to push forward on the monetization of the business and basically be the person to help take it public.
It'll be interesting to see the response. I told my 18-year-old who uses Discord, oh, they're going to have an IPO anyway. Ugh. Is there the possibility this could drive away a lot of the users because there's a bit of a rebel feel to it?
How interesting that was the reaction, because look, this is a community and it's very much one that feels passionately about the Discord community and might not want the moment where it's democratized, where they have to publicly let everyone know what the growth figures are. But look, there are 200 million monthly users of this product. And in many ways, you could tell your son, this is a democratization moment. Should all the money in funding rounds be going to the venture capital community, or is it a moment where institutional and retail investors are able to dine in on a company's ability to grow, to monetize, to start serving ads? That might be more of where the problem lies for your son. Maybe he doesn't want ads. Maybe he doesn't want that monetization of this particular unique asset. He'd rather that it stayed true to its roots, right? But with scale comes these sorts of problems.
Now, it looks like it's moving ahead. Is there anything that you've heard that might be able to derail this?
Look, I think a lot of this is predicated on where the markets are. Markets are near record high, S&P 500 near a record high. We've seen NASDAQ 100 close to it. And so when you've got great valuations, when you've got volatility, if you're looking at the VIX and other kind of benchmarks at real significant lows, this is a wonderful time to try and put your company public. But Motive is another company that's in the self-driving arena that's looking at the markets, we understand. But there's also the big whales out there. The SpaceX discussion. Will it be 1.5 trillion when it comes to the market? Could it come as soon as 2026? What about OpenAI? What about Anthropic? These are the kind of companies that people are talking about. Maybe if you're a slightly smaller player like Discord, you want to front run that. You want to get in a little bit earlier. So we see if the markets can continue to support it. And also remember, regulation and oversight. We're seeing some of the state governments take a keen eye on whether there's enough safety guardrails, particularly for children using Discord. So that'll be one to watch as well.
All right, we can chat more about this later on Discord. Carolyn, thank you for that. Bloomberg's Carolyn Hyde. And let's take a quick look at the markets before we go and see how things are shaping up as we head into the afternoon. And you can see the TSX, that rally's ending. Started off great, but for the year, but right now, little bounce back, and it's off by about 0.8%. S&P 500, it is up again now. It's up by 0.12%. And the NASDAQ, it is up 0.63% as we head into the afternoon trading. And that wraps up this edition of Trading Day. Thanks for joining us. Have yourself a great afternoon.